Okay, sounds good. Buenas tardes, mi nombre es Karen Williams y les voy a interpretar ahora. Estamos en esta reunión de habilitación de fideicomisos para personas que tienen necesidades especiales. Está ahí en la pantalla un link para que ustedes puedan usarlo con sus teléfonos para tener acceso a lo que se les va a presentar ahora, que son todos los detalles y la información.
All right, Molly, you want to go to the next slide? Molly or Karen, you want to do this one, and then I will put you into the interpreter's room.
Ok, ok, si bien escuchar en español, por favor les pedimos que en los controles de esta reunión de Zoom que le aprieten donde dice interpretación. El número 2 dice que haga clic en el idioma que quiere escuchar, que es en español, y después lo que tienen que hacer es silenciar su audio para que no interfiera con la presentación. Debe de unirse al audio de la reunión a través de audio, y no pueden escuchar la interpretación de idiomas si utiliza las funciones del audio de acceso telefónico o de una llamada telefónica. Como participantes que se une a este canal de español, lo que tiene que hacer, puede transmitir nuevamente el canal de audio principal si se activa el audio y el habla.
Okay, so then if you join us later, what will happen if you can't read this? You can put it in the chat and Karen will see it and I can get you into that room.
Ujú. Y si necesitan en español, nada más pongan en el chat y nos vamos a pasar al español también.
Okay. Karen, we're good? All right, Molly, we're going to run through our rules. This is why we keep our microphone on mute, in case you haven't had the experience of the dogs barking and the doorbell ringing and the children's screaming. We have, and so this is why we ask you to keep your microphone on mute. And there's all kinds of good stuff. Any questions, go at the end, put them in the chat. We will read them aloud during Q&A. Please use respectful language. This is a positive growth experience, and we're super excited to have it here. Recording and slides will be emailed out after they've been downloaded. It takes about 24 hours. So, Molly, it's all yours.
Well, thank you very much, and a big welcome to everyone who's joining us tonight. Thank you. I think on behalf of me and Stacy, we both feel really delighted that we were invited to speak on Enable Savings Plan and Special Needs Trust. And that's exactly what we're going to cover tonight. Stacy is going to be introducing herself in just a second, and she's planning on telling you everything you need to know about Enable Savings Plan in Nebraska. And then when she's done talking about that, I'm going to talk a little bit about Special Needs Trust and how both Enable Savings Plan and Special Needs Trust can work together to optimize a financial future for your special needs loan. So Stacy, I think the next slide is you introducing yourself, if I'm correct. So
yes, you are.
I'm gonna let you do that.
Great, thanks, Molly.
Let's give Karen just a few seconds to get caught up.
Okay.
All right, we're ready.
Yes, so my name is Stacy Pfeiffer, as Molly pointed out, and I am the director of the Enable Savings Plan of Nebraska. I administer and manage the Enable Savings Plan, and I do lots of presentations. So if there's anybody on here who wants a presentation for another group, I'm always happy to do that for you. I also serve on the executive board and several committees for the Able Savings Plan Network, which is kind of like on the national level for Able. Yeah, and go ahead, Molly, you can introduce yourself.
Okay. Well, my name is Molly Blazek. I'm an attorney in Omaha, Nebraska. I specialize in guardianships and conservatorships. And so I deal a lot in the world of special needs, and that includes special needs planning. And that also includes special needs trust, which is my part of the presentation tonight. I've been an attorney for 13 years. I went to Creighton for law school. And one of the things that makes my practice really unique is that like many of you, or like maybe you will be doing in the future, I also serve as a guardian. And so that lends really well to my practice, because not only do I understand the legal side of guardianship and conservatorship, I also understand the practical side of being a guardian, because I'm doing the same things that all Nebraska guardians are doing. I serve, ever since 2019, I serve on the Nebraska Supreme Court Commission for Guardianships and Conservatorships. And, you know, I'm really just immersed in the special needs community as is my family. So again, just really, really excited to be talking with you all tonight.
Okay, you were good, Karen? Okay, Molly, your audio's kind of in and out a little bit.
Okay,
I'm not sure why, but it might be that you just lean a little closer to the mic and it grabs it. Thank you. All
I
right,
will try to fix that. And I think Stacy's got this next slide, so I got some time to do that.
perfect. Thank you.
Okay, great. Thanks, Molly. So we're going to talk about the Enable Savings Plan first. So Enable is Nebraska's plan. ABLE is the national law that allows these plans, and then each state has their own iteration of the ABLE plan. So some of the laws that we have to follow are federal, and then some of the laws that we follow are state laws. So the ABLE, which stands for Achieving a Better Life Experience Act, was signed into law in December of 2014, and it allows individuals with disabilities to open tax-exempt savings accounts to save for disability-related expenses without impacting eligibility for resource-based benefits. And Nebraska's program, as I said, our state has our program called Enable. That was passed into law in May of 2015, and we opened in 2016. Okay, next slide. Okay, so we'll talk a little bit about the impact that Enable has to benefits. So Enable is designed to be a supplement to Social Security, Medicaid, all of those other great benefits that you can utilize. It's not a replacement for those. It does allow individuals to save more than the $2,000 in their name without impacting those benefits. So right now, Enable, you can have up to $100,000 before it would start affecting Social Security benefits. HUD disregards the amounts completely in an Enable account. There is one rule with housing. You want to make sure that you're spending money on housing in the same month that you're pulling it out of the ABLE account. So if you took money out of the ABLE account on the 30th of the month and then didn't pay your rent until the 1st or the 2nd of the next month, that could be considered income. So you want to make sure that you're spending that in the same month and that you're not crossing over months for the housing expenses. And that rule is for housing expenses only, okay? Neither earnings nor qualified withdrawals are considered income as far as Social Security resources are concerned. ABLE is also an excluded resource for Medicaid. A lot of times they want to know that you have an ABLE account and they like you, sometimes they'll ask you for the amount. You don't necessarily have to give them the amount because they can't count any of that as a resource anyway. It is important to remember that wages are subject to Medicare income guidelines, right? So we're an asset buffer, not an income buffer. So we want to make sure we keep that distinction clear. Next slide. Just going to wait for Karen to catch up here.
Very good.
Okay. All right. So who's eligible for an Enable account? So a person can open an account at any age. There's no age limit on how old or young you need to be to open the account. There are a couple of guidelines though. So you have to have the disability onset prior to the age of 26. So like I said, while you need to be disabled before the age of 26, you wouldn't need to be younger than 26 to open the account. We actually have somebody, she turns 90 this year. So she's our oldest account owner. Yeah, I'm kind of like thinking of what I can do for her 90th birthday special, So that is our oldest, and then the youngest is 1 year old. So we have the whole range of ages. And we are very excited that in January of 2026, that age is actually going to go up to 46 years old. So that's going to open it up to another 8 million Americans nationwide, and we're very excited. Veterans is a large group, people with spinal cord injuries, Lou Gehrig's disease a lot of times happens later in life. So those are a lot of kind of the groups that we're hoping will be able to take advantage of these accounts. So that's one of the things you have to do to be eligible. The other one is you either have to be receiving Social Security or disability, or if you're not, then you could have a certification from a physician indicating that you've got a marked or severe functional limitation, which is expected to result in death or has lasted or can be expected to last more than 12 months. So so you don't have to be on Social Security. And some people might ask, why would I want an ABLE account if I'm not on Social Security? Because, that's kind of the big incentive, right, to not have to do that spend down. But there are other benefits. The earnings are tax-free, so there's a lot of tax benefits to having this. I speak with people all the time who didn't have this, but now later they want to get on benefits, and now they have to scramble to get everything where it needs to go. So having this, right away, then you don't have to worry about that later in life when you do need those benefits. So, there are a few reasons why you'd want to take advantage of it now, even if you're not on Social Security.
Okay, we're gonna let Karen catch up just a minute.
Yep.
Karen, can you put in chat how to select the audio language? We've had about 10 people join, and I want to make sure they understand. Thank you.
Okay. Are you ready, Karen? Okay. All right, account ownership. So the person who's eligible for the account that has those guidelines that we just spoke about, they're going to be the one who's the account owner. So that's an important distinction from, say, like college savings accounts, right? Where maybe the person putting the money in is the account owner. This one, the eligible individual is the account owner. And you can only have one ABLE account nationwide. So earlier I spoke a little bit how each state has their own program. So across all programs, all states, you can only have one ABLE account nationwide. If somebody moved out of Nebraska, Nebraska is a nationwide plan, so you could take that with you out of state if you chose to do that. We do encourage people to look in their home states because Nebraska, for instance, has a tax benefit for people that live in Nebraska and put money into their ABLE account. So other states have those kind of benefits as well. So we always encourage people to look at their home state and use whatever works best for them, because the whole point of these accounts, right, is to help them. So yeah, okay, go ahead, next slide. All right, so we do recognize that the account owner may not always be able to manage that account on their own, and that they may need assistance from somebody. So this is kind of a newer thing. This started November of last year. Well, I guess 2 years ago now. We're in 2024. But you used to have to either have power of attorney or be a conservator or legal guardian to be able to manage the account. But now anyone on this list that you see in front of you can be the authorized individual. So now we've included spouses, parents, siblings, grandparents, rep payees, any of those people. This is a hierarchical list, so you would need to make sure that anyone above you on this list is okay with you managing the account. Yeah, so this is, we do another positive to having the account switched over to this authorized individual hierarchy, is that we no longer require all the paperwork that we used to require for guardianship. So instead of having to fill out a paper form and mail everything in and hope that all your paperwork is right, you can now fill the whole thing out online, and you check a box that basically says, yes, I am who I say I am, and I am authorized to manage this account on behalf of this account owner. And so it makes it a lot easier, a lot less paperwork, a lot more user-friendly and faster to get an account opened. Next slide. All right, tax benefits. So I spoke a little bit about this earlier. Sorry, Karen, are you okay with me continuing? Okay. Earnings are tax deferred while they are in the account, and tax-free as long as you use them for qualified disability expenses. So like I said earlier, any earnings, you're not going to get taxed on those. And anybody in Nebraska that contributes to an Enable account and files a Nebraska state income tax return is eligible to receive an income tax deduction up to $10,000 or $5,000 if you're married filing separately. So that includes the account owner, that includes grandpa and grandma, that includes your neighbor, anybody can deduct up to $10,000. Now, there is an annual limit amount that you can put into an account, which is $18,000 this year. So if, let's say you put in $8,000 yourself and your parents put in $10,000, you both could get those tax deductions. Okay. If the parents put in $18,000, they can only deduct 10. Just so there's no confusion about how that deduction works. Okay, next page. All right, Karen. Okay, so the next one is qualified disability expenses. So this is one big question that we get a lot. I've put my money into this account. What can I spend it on, right? So this list is the whole list of qualified disability expenses, things you can spend it on: education, transportation, housing, employment training, assistive technology, personal support services, financial management, administrative services, legal fees and expenses, end-of-life expenses, health prevention and wellness, and any other expenses that enhance the account owner's quality of life. So let's say you started a college savings account for your child, and now you're not sure if that child can go to college. You can roll the money into an Enable plan, and if they are able to go to college, you still can use it out of the Able plan for education expenses. But if they're not able to go to college, then you can use it for lots of other things. So that's one really great benefit of this. Quality of life encompasses a lot of things. There are several people who save for vacations with their Enable plans. So basically, the way that I kind of tell people to think about it is that Able rules fall under IRS rules, right? So if this account was to be looked at, it would be looked at by the IRS. So if you feel comfortable explaining to the IRS how the money that you spent fits under one of these expenses, then go for it, right? The big thing, again, because it is IRS, is you want to make sure that you're keeping your receipts and that you're tracking those expenses and that you're keeping proof of how you spent that money, right? So make sure that you are saving those receipts and that you keep that paper trail and that you have that saved in a file if should you need it down the road. Yeah, those are kind of all the different things you can spend it on. It's pretty flexible. So, okay, next slide. All right, and this is the other big question we get: what happens when the account owner passes away? What happens to that money? I do, again, want to remind you that it can be used for end-of-life expenses. So I do want to encourage you to use that for any expenses that are left. We can pay that out to third parties if we need to. Anything that person has for bills, you want to pay all that out. Then after that, what can happen are a couple different things. It could be rolled over into another Enable account or to some other Able account in a different state. If there's a family member or something, that can be rolled over without penalties. It could be rolled over into someone who's not a family member, but there could be like tax consequences or penalties with that. Also, I always want to point out that as of November of 2020, the state of Nebraska passed a law stating that we would not claw back any money that's left in an account to pay back Nebraska Medicaid expenses. So I know that was a concern previously, and so we did pass that law in Nebraska, so that is less of a concern now. That money would go then to a person's estate. So I get lots of people that then ask me, have a lot of questions about estates and all that stuff. So that would be a good question for an estate planner or an attorney, you know, once you get past that point, because once it's out of our account, then it's on to the next person. So we did also pass a law in Nebraska last summer that if the account is equal to or less than $5,000, the balance that's left on the account, then that money could pay out directly to a named beneficiary, successor beneficiary on the account. So if it's over 5,000, it could go to the estate. If it's 5,000 or less, then it could just pay out automatically. And the idea was that if it's under 5,000, we didn't want to make it this financially difficult for them to get that small amount of money, right? So paying an attorney to get $500 out of an ABLE account doesn't really make a lot of sense. So, so that's why we passed that law in Nebraska. We are still working on some of the administrative stuff in the background. Once we get that set on the application, we'll have a spot where you can put the person's name. People who already have accounts will be reaching out to you to kind of get that filled in as we go along. So kind of keep an eye out for that change to be coming soon. Okay, next slide. All right, fees. We do work hard to keep our fees as low as we possibly can. There are administrative fees that have to be paid to run the program. So right now it is $45 a year, which comes out to $11.25 per quarter. And then we also have asset-based fees depending on which investment option you choose. And then like if you have the checking account, you know, there's kind of regular checking account fees, ATM fees, those types of things. But that's it. We try not to have a lot of hidden fees for enrolling or investment changes or any of those types of things. So we really try to keep things, like I said, as low as possible. I do want to encourage people to request that your paperwork and stuff comes electronically. We have some changes that are going to be coming down soon. I can't quite talk about all of them yet, but there will be a lowering in fees for people who are getting their stuff electronically. So I want to start encouraging people to do that when they're signing up. Okay, next slide. All right, contributing.
Karen,
So, oh, yep.
no,
Oh.
just letting her catch up. We're good.
Yes, I'm sorry. Okay, so there's a minimum of $50 to open the account. Unless you're setting up an automated payment, then that could be $25, or if you have a payroll deduction. And then subsequent contributions can be as low as $25. Again, lower if it's automated or a payroll deduction. And anybody can contribute, and we've got lots of ways that you can contribute. Again, the limit for all contributions per year is $18,000, and that comes from all sources, gifts, employers, etc. Now, if a person is employed, they can participate in what's called the Able to Work program, and that allows them to save over that $18,000. And so it's I think it's like $13,590, or the amount of money the person makes in a year, whichever is the lesser amount. That's how much extra they can save on top of the $18,000. So, yeah, so that's an added benefit for people who are working. Again, we want to, and that's for like people who can't have a retirement account, right? Because that is going to affect their benefits. So they could put it into this instead. I do again want to reiterate that we're not an income buffer, we're an asset buffer. So, you know, as you're working, you want to make sure you're still within those income limits that you have. Okay, next slide. All right, so I'm going to talk a little bit here about UGift. And so UGift is a gifting platform that we have. And this kind of helps people to keep their account numbers more secure, right? Right now, if somebody wanted to, if without this gifting platform, if somebody wanted to contribute, they'd have to give them the account number for them to write on a check or whatever to contribute money to the account. With this platform, they can go to enablesavings.com. The account owner can log into their account. Then they would go to view and invite savings with UGift, and that would give them their code. It's a 6-digit alphanumeric code. Then the giver can go to ugiftable.com, put in that code, put in their name and the amount they want to give, and they can pay right there electronically on that website. I'm also using this platform to create another site called Give to Enable. It'll kind of work like a GoFundMe account, and it would basically account owners could make an account, they could upload their picture, they could tell their story of what they're trying to raise money for, because not everybody that has an Able account has a lot of disposable income to save here. So I'm trying to help some of those people who maybe do need to try to save for something or raise money for something that they really need, hopefully helping those people through this Give to Enable. And so people can make accounts there, and then I'm going to be marketing out to like all Nebraskans. People can take advantage of that tax deduction and help somebody with a disability. So it's really kind of a win-win situation. We're getting really close on that. I need some testers. So if any of you have account owners who, or any of you are account owners who want to, make an account on my Give to Enable page and, let me know if there's any issues or anything I need to fix before we go totally live with it, then let me know, and I would love to get in touch with you and help me go live with that. So next slide. Okay, so we have 5 different investment options. 3 of them are target risk options. They use the Vanguard mutual funds, and this is kind of like the stock market, kind of things when you think about that. So these are not FDIC insured. They're not guaranteed to turn a profit. These have a risk, but they also, can earn money. So there's a conservative, a moderate, and a growth option. And so the higher up you go, the more risk, but the more potential for return. These are more long-term savings options. So, depending what your goals are, you might want to use this, or you might not. So next slide. Okay, so the other 2 options are FDIC insured. So we've got the bank savings option and the checking option. So these are more kind of short-term savings. The FDIC insured, we worked really hard in the last year on this savings account. We switched to a different bank, and we're over 5% interest rate right now, which we're really proud of. So that is a good option. And then we've got the checking account option also. That does come with a debit card. The debit card is optional. I know there's been some people who have had issues with fraud. I don't know if you've had that on your bank account. Those fraudsters are getting smarter all the time. And so we have now made the debit card optional. So if it's not a thing you're using, then you can just not get it. And that can kind of help mitigate that fraud a little bit. So that's been a good change as well. And kind of a newer change that we've had. We've also made some changes. Previously, people who were guardians couldn't get the debit card. That has now changed, so they can use that. So yes, we've had some good changes in the last year with that to make it easier for people and better. Okay, next slide. All right, so thinking about those 5 different investment options, when you're opening your account, this is one of the questions it's going to ask you. And so you can put 100% into one of them if you want. You could split it out and put some into every one of those options. However you'd like to do it, as long as it adds up to 100%. So totally up to you. And any money that comes in, whether it's from the UGift platform or your employer or yourself, it would be split the way that you've chosen for it to be split. Some people get kind of nervous at this point because maybe they're not, really good at all the different investment options and they don't know what to pick, right? And I'm one of those people. I'm not a financial advisor, for sure. So, I don't want people to feel like this holds them up from opening an account, right? You can put it in whatever makes you feel safest at that moment. And maybe in the future, you get a chance to talk to a financial advisor and you decide that you want to do something different. Then you can change these at any time. You have 2 times per year that you can do investment changes, but you can do it at any time of year. There's not like an open enrollment or something like that. So don't feel like this is a rest of your life decision. Just do whatever feels best for you at that moment, and know that you can go back and change it. Next slide. All right, and so then now if you're ready to enroll, we always recommend people read the program disclosure statement. That's got all the rules and everything, so you can familiarize yourself with how the plan works. And then you can, like I said, you can fill it all out online. We do still have a paper option if you prefer that. I actually sometimes recommend people look at the paper option just so they know everything that they need before they go online and get stuck somewhere because they don't have something they needed and have to stop and time out, and that gets frustrating, right? So sometimes it's easy just to look at that form and get all your stuff together. Okay, and then it's pretty easy. Just fill out your information. If there's an authorized individual, they put in their information. You pick those investment options we just spoke about. You can pick how you're going to put the money in the account. There is options where you can put your bank information, so it's super easy to do it electronically. And then those delivery options. So that's what I was speaking about earlier. If you pick the e-delivery option, that could help save some money for you in the near future on the fees. And then you review and submit. So easy peasy. Next slide.
Me now.
Yes. That was it for me. So now we'll have Molly talk about special needs trusts, and then we'll do Q&A.
Well, before I get to that, Stacy, is it all right with you if I plug Enable a little bit more?
Sure.
Okay. For those of you who hopped on after the introductions, you just heard from Stacy Pfeiffer. She's the director of the Enable Savings Plan in the state of Nebraska. I'm Molly Blazik. I'm an attorney in Omaha who specializes in guardianships and conservatorships, and I am also a guardian myself for vulnerable adults in Nebraska. And Enable, in my opinion, is such a wonderful blessing to people who would otherwise not be able to save money because they might lose their government benefits. And I'm looking at your schedule, and I think that everybody should attend all of the other sessions that are available on this transition topic, because it's covering a lot of things that are really important to understand in connection with Enable Savings Plan and Special Needs Trust. But just to give you sort of a little bit of an introduction, or maybe a little bit of a crash course, when people are becoming adults in the state of Nebraska, which is age 19, often we're looking for benefits for them. Some individuals may work, some may not work. If they don't work, you might be applying for Social Security benefits. And depending on what kind of benefits you apply for, it might be the type of thing where you are not allowed to have over a certain amount of money. And in our world, that's called resources. That's kind of a buzzword in this arena, resources. You can't have more than such and such resources. Another example is Medicaid. If you're going to be applying for Medicaid for someone who is age 19, because they're not going to be on a private insurance policy, there's a resource limit. And Stacey kind of touched on that earlier in the presentation, but before Enable was, before the ABLE Act was passed, there was no way to save money beyond those resource limits, those thresholds, those ceilings. And so what Enable really does for people now is it allows them to have these reserved funds that they would have otherwise had to spend, and maybe not spend wisely. Sometimes people are having to do what's called a spend down. That's another buzzword in this arena. You'd have to spend down money, and you'd have to spend it on things that really didn't make any sense. It didn't help anyone. It didn't enrich their life like Enable does. You were basically just trying to dump this money so that you could maintain eligibility for these different government benefits. So Enable has been a wonderful, wonderful thing to avoid that outcome in so many people's lives. I use Enable for my own cases where I'm the guardian. Clients use Enable. I think Enable is such a wonderful blessing. And so I would encourage everybody to look into Enable as part of a financial plan for their special needs loved one. And with that, there's also this component of special needs trusts. And I think Enable works really well with special needs trusts. And, this is going to be kind of a 101 presentation on special needs trusts. We could probably easily talk about special needs trusts for a whole hour and a half alone. And so maybe some of these things might be a review for those of you who are a little familiar with special needs trusts. Maybe this is new information, but it's definitely going to be just sort of a 101 trust information session. And what a trust does, or maybe let me start somewhere else. I think a lot of times, if you're like a lot of my clients, they'll come into my office and they'll say, well, I was told that I need a special needs trust, so I'm here to get a special needs trust, but no one has ever explained to them what that means or why that's needed or how that's beneficial in their family's life. So I think a good place to start is maybe just understanding what a special needs trust is. And the easiest way to understand it is it's a legal vehicle. It's a legal mechanism. In fact, a lot of attorneys, if you go into their offices and they talk about special needs estate planning, they'll put a piece of paper in front of you. They'll draw a box on the piece of paper and they'll say, that's a trust. This box is the trust. They'll draw arrows into the box and they'll draw arrows out of the box. And that's meant to represent that you can put things in the box and that you can move things out of the box. And I think that that's a really good visual for understanding what a trust is. A trust is just a container, a bucket. I often refer to money buckets. And so a trust is a container or a bucket or a legal vehicle to hold money or other types of assets. Special needs trusts in particular are buckets or vehicles to hold money for someone who's receiving needs-based government benefits. So those two things that I just mentioned before, Social Security, if someone is receiving Social Security SSI, which is supplemental Social Security income, that's a needs-based government benefit. You're not allowed to ever have more than $2,000 in resources if you want to maintain eligibility for that. And so Medicaid is another example that I mentioned, and Stacy talked about that earlier too. If you're a Medicaid recipient, it's a needs-based government benefit. You can never have more than $4,000 at any given time. Otherwise, you jeopardize your eligibility for the benefit. So the question becomes, what do we do with excess money? And while Enable is a wonderful, wonderful blessing, like I just mentioned, sometimes you have even more money that you need to put in a bucket so that somebody can maintain their eligibility for things like Social Security and Medicaid. And I really like to use Enable accounts with special needs trusts. And I'm going to explain more about that as we go on in the presentation. Special needs trusts are commonly referred to as SNTs. So if you ever, I guess, want to be impressive at coffee on Saturday morning, refer to it as an SNT. And that's kind of what we talk about in terms of trust planning. So if somebody says SNT, they mean special needs trust. Every once in a while, they'll also call it a supplemental needs trust. Usually everyone's talking about the same thing. And it's the type of trust that is written so that it can hold money or other assets and it can maintain needs-based government benefits for another individual. One thing that's important to know about special needs trusts is that trust can either be revocable or irrevocable. And a revocable trust is what it sounds like. You can revoke it, you can modify it, you can change it anytime. But a special needs trust in particular has to be irrevocable. Sometimes people say irrevocable, but it can be modified and it can't be changed. So that's an important distinction that makes special needs trusts different than just regular estate planning, where somebody might have what's called a revocable living trust. Some of you watching this might have that. Special needs trust is a little bit different in that it's irrevocable. There are two main types of special needs trusts, and we distinguish those by calling them first-party trusts or third-party trusts. Now, don't let this be intimidating to you like it was for me when I was first trying to learn about special needs trust. It really is a distinction about where the money comes from. First-party trusts are about money that belongs to the special needs individual. So in the next slide, I'm going to show you an example of a special needs woman who's named Alice. Money that belongs to Alice, that's coming directly to Alice, that's first-party money. So a first-party special needs trust would be a bucket for Alice's money. She might get it through income. She might get it through a settlement. She might get it through inheritance. There's all kinds of ways that the money could be hers, but it's hers. That's what makes it first party. Third party is different, and that means it's money that comes from a third party, from somebody else. So if money is given to her, and perhaps the inheritance was a bad example because the best example of a third party trust is someone leaving an inheritance for a special needs child. But there's more than one way to do it, and that is not something that I'm going to talk about in this particular presentation. I'm going to focus on first party trusts only because I think it connects really well with Enable. But just know that first party means money belonging to the person who's the beneficiary of the trust, and third party means money that belongs to someone else, but the special needs beneficiary gets to use it. So that's the distinction. So we're going to talk about first party trusts, and I'm going to pause here briefly to make sure that Karen is caught up.
We're good.
Okay. All right. So like I was mentioning, this is Alice. We're going to talk about two scenarios where Alice might be using a first party special needs trust. And in this scenario, we've got her receiving government benefits. So just like we were talking about, she's now got more than $4,000, which disqualifies her from Medicaid. Or if she's receiving Social Security SSI, she's got more than $2,000 in benefits. And so she or $2,000 in resources, which disqualifies her from that benefit. So now we're in a situation where Alice has more money than she should have, and she's going to lose Medicaid and lose SSI. And let's just take Enable off the table for right now. Let's just say Enable is not available. The question is, what do we do with that money? Well, Alice can either spend it, like we were talking about with the spend down, or she can create a first party special needs trust to hold the excess that would then continue to let her receive these government benefits. Like Enable and well, special needs trusts are like Enable in the sense that what you place in them doesn't disqualify you from your benefits. So they're protected in the same way that assets in an Enable account are protected. So in this situation, Alice does just that. She uses her money to fund an irrevocable first party special needs trust, and she's okay. She continues to receive her benefits. She's going to get SSI. She's going to get Medicaid. We're all good here. But the reason that Enable, I think, in a lot of instances is more preferable to a first party special needs trust is that at the end of Alice's life, whatever is left over in her first party trust will go back to pay the state's Medicaid program for her care. And that's something that Stacy was talking about with that law change. It used to be that Enable was the same way. And at the end of a beneficiary's life, whatever was left over in their Enable account would go back to pay the state Medicaid program. And now that's changed, but special needs trust has not changed. And so a first party special needs trust that has money in it at the end of the beneficiary's lifetime will go back to the state of Nebraska. And so that's one reason that I think in Alice's situation, truly, if Alice's guardian came to my office today, I would ask first, do you have an Enable account? And if not, I would say, okay, well, let's open one and fully fund it up to the $18,000 that we're allowed to do this year. And then if there's still money left over after that, then we can talk about a first party special needs trust. But that's truly, I think, the best order in making all of these tools work together. Okay, second scenario for Alice. We're still talking about her money, it's first party money. But let's say she gets into a car accident, she's been injured, and now there's a lawsuit and she's going to be compensated for her injury. There's a settlement for a personal injury. We can't prevent her from getting that money because she's owed it. So it's not like we can say, no, we don't want the settlement. This is going to jeopardize her benefits. We're going to turn down the money that's being offered. She has to accept it. But just like in the other scenario, it's now going to put her over these resource limits. And so the question becomes, what do we do with the money? Well, in this scenario, she can also open a first party special needs trust or create a first party special needs trust. And whatever money needs to be placed in that so that she can stay below those resource thresholds, that's exactly what she could do. But again, just like the last scenario, the limitation is that at the end of her lifetime, whatever is left over in that special needs trust goes back to pay the state Medicaid program. And so again, that's why I think funding an Enable account first makes a lot of sense. And then if there's more money that needs to be put into another bucket to protect it, then we look at first party special needs trusts. Enable accounts and special needs trusts can be used very, very similarly. It's not exactly the same, but it's very similar. So on the screen now, I've got some examples of some things that you can use the special needs trust for. So clothing, prepaid burial expenses, travel and entertainment, household items, furnishings, furniture, appliances, televisions, computers, electronics, and then attorney fees. So legal fees, guardianship fees, trustee fees, those can all be paid from the special needs trust.
We are ready to go. Keep going. Yeah.
There are also some things that you absolutely cannot use a special needs trust for. And I've got those two things on the screen here. One is food and shelter. And the reason for that is if someone is receiving Social Security benefits, you must use the Social Security benefits for food and shelter. And then the other thing you cannot do is direct cash payments. That's not something that's permissible in how the trust is used. So if a family is then looking at creating a first party special needs trust for one of their loved ones, or if the loved one is doing it themselves, one of the initial questions that has to be answered is who's going to be in charge of it? Who's going to direct how the money in the trust is used? And the person who is in charge of the trust is called a trustee. And usually we want someone in the family to do it. It makes a lot of sense, honestly, to have one person, I think, be in charge of both of these accounts. So if there was an authorized person for the Enable account, I think it makes a lot of sense to have that person also be the special needs trust trustee. But if a family member isn't available, banks will also serve as special needs trustees. There are other financial institutions like brokerages like Edward Jones, for example. And then there are also corporate and professional trustees. There are trust companies in Nebraska who will serve in this role, but these are all options for who can be in charge of the trust. And what a lot of people will do in their planning is they'll designate a family member to serve, but then eventually there'll be some nomination of a successor, and that'll be some type of financial institution. It's like I don't want to say a last resort, but it's sort of just like the last thing that you enter in your plan, just to make sure that there is a designated decision maker if the prior people who are nominated are not able or willing to be in that role anymore. Now, as I've been mentioning, I think that using a special needs trust with an Enable savings plan makes so much sense. And on the next slide, I actually have kind of a flow chart or a hierarchy for how I think money should be utilized in these types of scenarios. But I think the best advice is that you put money in a first party special needs trust after the Enable account is fully funded. So that might be you have the maximum contribution limit, that's $100,000, or maybe you've already put $18,000 in the Enable account this year. And it's after one of those two events that you'd be looking at creating a first party special needs trust. Now, I want you to take 2 screenshots today, and this is the first one. And if you remember nothing else from my part of the presentation, this is the piece that I want you to remember, because I think this financial mapping tool is going to be really, really beneficial for a lot of people. This is the order and structure of how I think the best financial plan looks in the life of a special needs individual. So they're going to have some type of checking account. Maybe that's their own checking account because they're working and they have some income. It might be a guardianship checking account. You know, the guardian is in charge of the finances. That could also include income. It could include receiving government benefits, or maybe you're not the guardian, but you're going to be the payee for Social Security benefits. But in some way, usually there's some type of income going to some type of checking account. It might be titled differently depending on who's in charge, but you begin with that checking account. And honestly, there's a checking account function within Enable Savings. And so I think some people might even look at that to satisfy this particular requirement, but just know if you do that, there's limitation on spending that's not applied to just a general checking account. But once the checking account is utilized and you can't put any more money in it because you're reaching those resource thresholds, then it pours over into an Enable account. And then once you reach the Enable account threshold, it pours over into a special needs trust. And so this financial mapping tool demonstrates at least what I think is the best financial setup for all resources, all income. And this is really how it should be funded, I think, to maximize the ability to receive government benefits, but also maintain savings and not have to just spend money down erroneously. So let's talk just briefly about finding the right attorney for a special needs trust or just special needs planning in general. You know, the trouble with attorneys is you can really call yourself an expert in anything. And that's sort of what marketing has become for attorneys. In fact, it used to be that attorneys weren't allowed to market at all. You got the phone book. That was it. You could just put your name in the phone book and that was it. And that's why everybody would fight for those like AA and AAA beginning spaces. But with the adoption of marketing in the legal field, one of the pitfalls has been that attorneys really can call themselves anything they want. They can say they are an expert in anything they want. And there's really not a lot of ways for the general public to be able to ascertain whether that's true unless you're actually interviewing the attorney in their office. And so it's important right away to make sure that you're talking to someone who actually does have expertise in the estate planning field. Obviously, within that they have experience with special needs planning. And so, you know, one example that I've put on this slide to ask an attorney that you're interviewing is, hey, what percentage of your practice is devoted to estate planning? You know, are you devoted solely to estate planning? Is that all you do? Or is it a small percentage of what you do and it's maybe not something that you do very often? Because obviously you'd want to be partnered with the attorney who had more of their practice devoted to estate planning, because that would signify that they have familiarity in the field. There's a lot to be said about attorneys who are specialized. It's becoming very much in the legal field like the medical field, where attorneys are specializing and they have an area of expertise. And one of the tremendous benefits about finding someone who is an expert in their field is that you're not paying them to educate themselves on how to do what you want them to do. You know, a good example of this is, for me, I have an expertise in guardianship. If you came to my office tomorrow and asked for a divorce, I would say I'm probably not going to do you any good. But if I, for some reason, said yes, the first thing that I'd have to do is figure out how to do a divorce. And so partnering with someone who has expertise in estate planning prevents you from having to be the guinea pig for them, figuring things out. Another thing you can ask is, how many special needs estate plans have you prepared? Or how many special needs plans have you administered? Administered means actually helped distribute the money, assisted the trustee in terms of distributing and carrying out the instructions of the trust. Because there is a difference between just writing the trust, which is very transactional, versus actually utilizing the trust and assisting and advising a trustee in carrying out the trust instructions and their duties under the law. Another thing that I think would be important when you're interviewing attorneys is, are they familiar with common terms? If they're talking to you about things that make sense in the guardianship, special needs planning world, like resource limits, or if they know the distinction between a first party and a third party trust, things like that. If they are familiar with common terms that Stacy and I have been using throughout this presentation, that would be another indicator that they're probably a good fit. And above all, you have to trust them. You have to have a good rapport. You have to have good communication. You want to make sure that you have an attorney who's going to be responsive to you. And you might have to interview a few attorneys where you feel that level of comfort. And that's okay. That's absolutely okay. We get it. We understand that not all of us are the right fit for everyone. And there are so many more people than any single one of us can help, so it's okay to interview. It's okay to get referrals from your friends. It's okay to check out the internet, and it's okay to go to interviews and not hire the attorney because it didn't feel right, or to take your time thinking about it. Those are all totally normal and totally okay things to do. So a lot of people will then ask, well, how much is this going to cost? And this would be a good time to plug Enable again, because this is another reason why I recommend an Enable account before a family looks at a first party special needs trust, because Enable has no enrollment fee. You make the initial deposit. There's very little barrier to entry, but a trust, that's going to require, money up front to create the trust document. And then it's going to also require money to administer. And so from a financial perspective, it's more expensive to create a trust. And sometimes it's absolutely necessary and worth the money, but it's another reason why I think Enable should be looked at first. And then once Enable is funded for the year, or, the maximum contribution, then look at the more expensive option, which is a special needs trust. But just remember that cost is not indicative of value. Cost is not necessarily something that, well, here's a good example. Sometimes I hear people complain that there are different rates for people in firms. So someone who's been in practice for a long time, like me, might have a high hourly rate, whereas someone who is brand new and maybe has been practicing 1 year has a low hourly rate. So let's say I'm $200 an hour, and an associate attorney who's brand new is $100 an hour. To someone who's not very familiar with how law firms operate, it definitely looks more attractive to hire the associate attorney at $100 an hour. It absolutely does. But the thing that's missed often is that associate attorney might take 3 hours to do what a seasoned attorney can do in 1. So don't be lured into low cost as being an indicator of value like that, because in a situation where someone is more expensive, they might actually be able to give you a better value for your money because of efficiency. So expertise lends to efficiency, and cost is not necessarily an indicator of value. So I want you to focus on the attorney's expertise, the quality of their work product. Remember that complexity increases cost, simplicity decreases cost, and most estate planning attorneys charge flat rates for their estate plans, not hourly. So I know I gave you the hourly example. That was meant to be a visual only. If you go to an attorney who wants to charge you hourly for a special needs trust or even a broader estate plan, that would be an indication to me that they might not know what they're doing, because it's abnormal to charge hourly in estate planning. It's more normal to charge a flat rate. So the attorney would quote you a cost for a particular work product, and that would be the cost. It wouldn't be something that they work on and then they bill by the hour. So that's just some food for thought on expected costs for special needs trusts. It would be really poor of me to tell you what one would cost, because there are just so many circumstances that can impact the complexity or the simplicity of what a family needs. And you know, every vulnerable person, every special needs person has unique needs and changing circumstances. And so it would not be good of me to tell you what I think one would cost, because I don't know your situation. I think that if somebody tells you it's going to be $10,000, that's way too much. Someone tells you that it's going to be $500, that's way too little, you know? So two extremes for examples. I think you want to be, you know, nearer to the middle in that. My biggest advice for everyone who's watching is that we are so fortunate to be living in a time where we have so many more tools available to provide for people who are receiving needs-based government benefits. And there was a time not so long ago that lawyers would tell people, oh, you know, you can't plan for your special needs loved one's life. You just can't do it. You need to disinherit him and or her, and that's the best you can do for them. And that is just such terrible advice. If anyone ever says that to you, just know that that is so far from being correct. We are living in a time where we have so many tools like Enable, first party special needs trust, third party special needs trust. Families really need to be taking advantage of these tools and optimizing futures for their family members so that there's security and so that we know that they're going to be provided for and that their life is going to be enriched, which is the name of Enable. That's the entire point, achieving a better life enrichment. This is my last slide before I hand it back over to Stacy, but this is the second one that I want you to take a screenshot of because there's some really important information on here. I know you're going to have a speaker about guardianship, and so I don't want to take the limelight away from them, but there are some really cool tools that we've been launching and making available to Nebraskans this year, and those are on your screen. One thing that my firm has been doing since July is weekly. We've been offering a guardianship clinic, totally free, on Zoom, just like this. It's noon on Thursdays. You don't have to be a client. You can simply just log in and get to know other guardians. So it's a support group. It's also a place to ask questions and share resources. And honestly, even though my firm hosts it, I have benefited so much from just participating in it as a guardian myself. So I would be remiss if I didn't share that link with all of you who are watching. And as part of that, we also have a guardian Facebook group where we do the same thing, support one another, share resources. And we also host monthly workshops on different guardianship topics. And we've been doing that for several years. So the replays of our prior workshops are in that Facebook group. So take a screenshot of this. These are really great resources, totally free. You do not have to be a client to be involved in this. We just want to value add for Nebraska Guardians. That's our mission at Blazik Law Group. So I want you to take a screenshot of this and have these resources at your disposal if you need them.
All right, and I also have our resources as well with the Enable Savings Plans. We've got a website and we keep that pretty up to date. You know, there's resources there if you are a support individual. We have lots of things you can print off and give to people about Enable. We've got a Facebook page and we've got a customer service number as well. So lots of ways you can reach us and learn about Enable. And next slide. These are our program disclosure statements that the attorneys make me put up. So I'm not an attorney, like Molly is an attorney, but I'm not. So we just want to make sure you know that this is educational, and we want to make sure that you're working with professionals that can help you if you have questions on different things when you are using the Enable plan. And yes, I'll put my email address into the chat. Our customer service, of course, can always help you. But if you ever get stuck, I'm always there to help. So email is usually the best way to get a hold of me, just because then I can send you links and you know, help you out that way. Oops.
Okay, I'm gonna break protocol here, friends, and record some of these questions because I think these are actually really beneficial for the groups as a whole. Sorry, Molly. I know I lied to you, but here we go.
It's all
Okay,
right.
the first question is, wondering if Nebraska or Lincoln has any paid administrators for an SNT. Special Needs Trust. So
Yeah.
Molly is.
Well, I guess I mean, there are corporate trust companies. You know, there's one next door to me in Regency, First Nebraska Trust Company. So there are professional trust administrators that charge a fee for administering trust. There are those. I don't know that I could give an exact list of all of those right now, but they absolutely exist. And so I think you know, an easy Google search would probably reveal a lot of those that are available. And I think the same advice would go for interviewing attorneys. You know, interview the trust companies kind of with the same questions.
And I also think that, you generally, when you go to set up a trust with an attorney, they're gonna have a list of administrators that are proximate to your area, and so if they don't know what that is, that's another red flag.
Well, and I guess just to kind of add maybe to that a little bit, you know, one of the things that you also have to kind of consider in finding a trustee, a professional trustee, is how much money you have in the special needs trust account, because not every financial institution is they're not attracted to special needs trust unless there's a lot of money in them. I think I heard recently that Wells Fargo Bank required $1 million in a special needs trust before they would ever even serve as trustee. But the thing is, if you talk to lawyers who are familiar with special needs trust, you'd never want to put that much money in a special needs trust. You just never, that would be overfunding it. There's no way someone would be able to use that in their lifetime, given all of the support they're already getting through, you know, Medicaid and their other benefits. And so there's, I think, a lot to be said about refraining from national banks as trustees and looking more to like local banks and credit unions and professional trust companies. Those are definitely the places that you want to look at first, because they're going to be more reasonable about the fees that they charge, but also be more willing to even be part of the interview process.
I'm gonna let Karen catch up, and then I'll move on to the next question. Okay, so I think this question related to the fees that were charged, Stacy, when you were talking about the costs per year for an Enable account. The
Okay.
question is, what do the administrators do for this money?
So part of that pays my salary. So I, you know, oversee the account. I come up with legislation, for the state of Nebraska. Like I said, I always also work on the national level to help with legislation there, to help these accounts work better, like make the changes, like the debit card changes, you know, I administer all those things. I make all the marketing materials. I go around and give presentations to tell people what Enable is. And then we also have a company that we contract with that does all the underlying record keeping, and they have legal, you know, and we have technology that keeps all your information safe. So all of those things. I will say that as the plan grows and as we have more people to incur those costs, that helps the fees to go down, right? Because the costs are what they are. And so the more people that we have, then that can help the fees to lower and to spread those out a little bit more, which is why I work so hard to continue growing the program.
Okay, Karen, you ready? All right, Enable question. The yearly limit is 18K, but you can have up to 100K. My question is, are there options to deposit a lump sum at one time that is larger than 18K? Or is it only 18K per year?
So at this point in time, it's only the 18K. There might come a point someday if we can get some legislative change going through, where that could change. But right now, 18,000 is the limit. And so that's where Molly spoke about the special needs trust, where that would come into play. And you would open one of those to put that additional money in there.
Kind of second to that question, is there an age limit on the investing?
Nope. No age limit. As long as the disability's been incurred by the age of 26, it doesn't matter how young or how old you are when you open the account.
Okay. Our next question is, can SSI, SSDI be directly deposited into an Enable account?
On a nationwide level, there are a few states that are starting to dip their toe into that. And by a few, I think like one. It's very, very new. So there are a lot of intricacies with Social Security and how you would get that to work, right? So since these plans they actually had their 9-year anniversary today since ABLE's been passed. And so they're still working through a lot of those things. So at the moment, that's not a thing that's allowed, especially not in Nebraska, but it will be in the future. It's a thing that they're, like I said, just starting to look into and work through. So look for that in the future.
And Molly, this one's for you. Can you transfer money from a special needs trust to Enable over time if you sheltered the money in a trust because it was over 18K at the time it was coming to you?
For a first party trust, I think that the short answer is yes. I think there's some scenarios where you may not want to do that. But for a first party special needs trust, yes, you can absolutely do that. It's just a matter of whether that makes sense given the circumstances.
Okay. Here, this is for both of you. If you have a question on whether or not an expense qualifies, can we call you?
Absolutely.
Yep, you
Well,
bet.
that would probably be a great question for that group you have it. The trust one that you have, Molly, for your Facebook group. That would probably be a really fantastic question.
Yeah, yeah, absolutely. Do you want me to link it in the chat again?
Yeah, that'd be great. And then I have some more questions. We have lots tonight, guys. How many participants are in the Nebraska Enable program?
We're a little over 3,800. We're getting close to the 4,000 mark for accounts. So we're very excited. And
Okay.
we're at a little over 38 million for assets.
That's fantastic.
Mm-hmm.
This is from the Q&A box. When you say the leftover money in an Enable account after a death goes to their estate, if I have guardianship of my son, do I need to have him have a will? Otherwise, what is the priority of who the money goes to? Parents, ? Siblings, ?
There's not necessarily a priority of where the money goes. That would be up to, I would assume, you as the guardian, Molly. That's probably more of a you question. I'm not a probate attorney or anything like that.
I'm multitasking and I shouldn't be. I'm trying to get the link to the Facebook group in the chat. So I'll pause on that. And
We
I'll
can send it out too with our slides, Molly, so don't worry about it. We can get it there.
okay. One of the things that Stacy has been phenomenal to work with about is answering questions like this, because different situations call for different things. And so, it's a very natural question when Enable says, okay, we're going to have the balance of a account go to the beneficiary's estate. The question is then, well, how does my special needs child have an estate? Do they need to have a will? And the answer to that question is going to be different for everybody, because some people can make a will and some people cannot make a will. And this is something that actually gets very confused in the guardianship world. You can make a will even if you have a guardian. The threshold for capacity to make a will is much lower than the threshold for capacity for requiring a guardian. In order to make a will, You basically have to know who you are, what you have, and where you want it to go. The practical problem that I find in our world is that it's very difficult to find an attorney who will want to make a will for someone who is under a guardianship or otherwise special needs. And so it gets very confusing for families about whether or not their special needs loved one should have a will. But in the event that they do, then once the enable money is in the estate, the will govern how those distributions are made. So whatever the will says will be followed. If there is no will, and I guess maybe this is something I should clarify too. A lot of people will say, well, I don't have a will, so that means I don't have an estate. That's not true. You have an estate whether you want one or not. The only difference is you can use a will to give instructions for what happens to your estate, or you use the default plan provided by the state of Nebraska. So if there's an enable beneficiary who passes away, they have no will, but they have money left over in their account. Let's say it's over $5,000. So Stacy's not going to be making a direct distribution to someone else. It will pass through Nebraska's default plan, which is our intestacy laws. You are intestate if you die without a will, and it follows family relationships. So it looks down first, so do you have descendants? If you have descendants, we're going to distribute your estate to your descendants. If you don't have any descendants, then it starts to look up and out. It's called the chart of consanguinity. I will spare you the law school lesson about the chart of consanguinity, and I will just tell you that it's like parents and then out from there. So parents, siblings, and it goes out from there to more remote relatives. So whether or not your child needs a will is something that you'd have to ask an attorney who would be more familiar with them. That's just is kind of hard to answer without knowing the circumstances. But there is Stacy, I'm gonna put Stacy on the spot. I feel bad about this because I don't know the answer to this question, but does Enable allow the small estate affidavit in Nebraska?
Yep. Yeah. A lot of times, that does happen quite a bit where somebody will fill out the small estate affidavit and then we have like a letter of instruction that will tell us pay this money out to this person and so then we'll follow that.
Okay, so then that actually takes the will question off the table and it makes this so much easier because in Nebraska we have a court form that's available on the Nebraska Supreme Court website, and it's called the small estate affidavit. So if somebody dies without a will, I guess I'm going to say next of kin. Their next of kin or whoever is entitled to the money can use this form and take it to Enable and say, I'm the person who's going to be receiving this money. I'm entitled to it. And they use this affidavit to transfer the assets. And then you can bypass the entire probate process.
Mm-hmm.
There is an inheritance tax component, which, that's like level 300. We don't need to get into that, but the question about needing a will in that scenario becomes obsolete because you can use the Supreme Court form.
Okay. This is just a comment I'm going to share. Amy did point out that the administrative funds really do go to some very good causes, such as Medicaid no longer is able to claw back money if someone passes. And that's an enormous deal in terms of what the family can use. So that's a fantastic comment. Karen, you ready for the next question? Okay. We want to set up funds for college or future needs for a minor child on the spectrum who receives Social Security surviving benefits and has a checking account at the bank where those benefits are entered. He also has a savings account with funds from his deceased parent that is controlled by the court, and funds cannot be withdrawn without a court hearing. Would he qualify for an Enable first, and who do we contact?
Well, depending where he is on the spectrum, I would assume he would qualify for the Enable account. Yeah, the person would have to kind of determine that on their own as long as it falls under those guidelines that we have, where if it's let me get the right wording here. A marked or severe functional limitation. So depending where they are on the spectrum, he would be eligible for an Enable account. the age, it sounds like, is under 26. So those are our two criteria. So yeah.
We have a couple other questions here. Some of these are Enable, some of these are different. Could this recording go in the Enable YouTube channel? That's the first one.
Sorry, what was the question?
Could this recording from tonight's presentation, could it go on the YouTube channel for Enable?
Probably. If you guys give me the link, I can throw it up there.
All right, we can do that. Is there only one bank responsible for Enable in Nebraska, or can you open an Enable account at any bank?
You actually can't open an Enable account at any banks in Nebraska. FNBO used to be the program manager. They left the program manager world. And so that's not an option, unfortunately. I work with people. I've walked people over the phone through how to set them up. I've done Zoom calls with people so we can like look at the same thing to help them set up. I'm in Lincoln, so if you wanted to come visit me, I could help you set it up, but you can't go into a bank and set it up. And so it all is under a trust, which is under the state treasurer's office. And then we have banks that we contract with that kind of manage the different. So Next Bank, for example, does the savings account. Fifth Third's Bank manages the checking account. And then, yeah, so there's not a bank you can go to, I guess is the short answer.
Okay. Who audits the Enable account spending? Is it the IRS or the state of Nebraska? Or somebody else?
We actually have a third-party vendor that has to audit it every year. They actually just sent me an email.
That's all right. They want to know if you can-
Hayes and Associates is the name of the company there.
Okay.
But yeah, we have to contract with them. We're required to be audited every year.
They want to know if you can drop the link to the Enable YouTube channel in the chat.
Sure.
Then this is a Q&A. I think it's for you, Stacy, but I'm not 100% sure. Did I hear them say that if a disabled person inherits directly, they can open the Able account and put the money in it then with no benefits penalties?
I don't,
Well, up to $18,000.
yeah, right.
Molly posted the link to the Guardian Connect Facebook group in the chat. So if you click that link, it will open it in a new browser for you. Okay, she also put in there the small estate affidavit that Stacy and I were talking about. And that's the personal property without probate, good times that everyone really wants to read tonight to keep them up all night. And then we are taking questions from the Q&A and dropping them in the chat. If we missed one, please let us know. We're working together here. And I am gonna stop the recording at this point.